Morning traders, could I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks. How we doing in YouTube? Great. Thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. We got a lot to talk about, so let's get right to it. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades I've shared in the Bookmap Discord Trader Lab community, as well as an understanding and sharing an understanding of how the market works, why it does what it does, how you might get in alignment using structured trades and a trade plan that you vet so you understand where your trades might show up and if you actually have a statistical edge. The market is 100% random 100% of the time. And if we cannot control what happens in the market, the only thing we control is what we do. So how do we know where to do it, where we might have a statistical edge, and also maybe when we should not be trading? Can you differentiate that? And if you can't, yet you still have winning trades with random outcomes, because it's always random, if you don't have a statistical edge, in spite of the winning trade, you're still going to be a loser. Now, most of us think it's about certainty and confirmation. So we go on the quest, of course, for that. And where is that choice emanating from? From our primal wiring to avoid risk. So we try to build trading, which is seeking risk, with the belief that somehow we can avoid risk. I think that's illogical. Yet our primal wiring directs us to go on that mission because it's logical, and guess what? It's emotionally triggered. So let's put aside what we need to do to fulfill our psychological needs. Maybe let's focus on what we need to do to potentially develop a career in this business. And that's the purpose of Trader Lab. There's no cost for it. There's a link in the bottom of YouTube, and you guys are all welcome to visit. And then it's up to you what you do with the information that's shared. The reason I do this stream, when Bookmap asked me to do it, was because I've done everything you've done, and unfortunately, much more. Almost 46 years of trading, both professionally and otherwise, you get to do a lot of stuff. So I've done it. So I found out, unfortunately, after many, many, many years of Trader Groundhog Day, that I was using in developing a defective process, because I was always trying to squeeze certainty out of it and looking for confirmation, and yet I was not aligned with the actual business. We'll talk about that. These are structured trades, and you are all welcome to download these. You have to go to the Bookmap Discord Trader Lab community, use the link in the bottom of YouTube. You need to verify your email address. This is to keep spam and riffraff out. And then you can access all the information in the Trader Lab. And basically, this is how you do it. If you're currently a Bookmap subscriber, use the email associated with your subscription. If you're a TOS user, you can get a free registration. And if you're not any of those, you can still join the Bookmap Discord community and take advantage of all the education, but you need to verify or else you won't get access to the 60 PDFs or the library of webinars and documents that the participants in the Trader Lab have assembled. Now, let's go back here. This is the higher time frame. Now, remember, you have to vet everything for yourself. Past performance is not indicative of future results. I believe I did the disclaimer. Guys, did I do the disclaimer? Please confirm. Did I read the disclaimer? If Discord. Okay. Anybody else? Stephen? A yes or no would be useful. Okay, thanks, Luck. Thanks, everybody. Sorry, guys. I got to take care of this. This is called business. And there's a legal aspect to this too. So you guys all understand, right? So we're going to zip right through. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk or losses not suitable for all investors. Past performance is not necessarily indicative of future results. You got to vet everything, right? Okay. And find your own groove. Now, this is the higher time frame. Now, this is 2 days before yesterday. This is the micro composite, and this represents intermediate time frame. Let me show you quickly. This, as you guys know, has been a target, 56.24. You also know we had a gap here. Now, what is this? This is a consolidation. Now, you'll notice, the market's been going higher, going higher, going higher. And this is now the retail price in the consolidation. And I'm going to take you just down a hair into another concept. In the volume profile, these are auctions. So if we find too low in the overall volume, in all of this volume, and this is what the profile is, it suggests we can rotate. If we find too high, we can rotate. Now, there's another piece to this, of course. If we get below here, think of this as support, then we can come down to the next level and rotate. So then if this is too high and this is support, and I come below it, then it can become resistance, and then I can rotate down here. What does that set up for me? 75 and 49. Now there's the next question. Why? Here's why. What does the market do? You see me do this every day. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. Market goes down to go up, go up. Market goes up to go down. Market goes up to go down. Market goes down. Goes, I don't know, inside day, goes down to go up, gap, goes up to go down, goes up, goes up, goes up. And what's under here? Stops, stops, stops. Watch. Now, and nobody knows, except we do know market mechanics if you're in Trader Lab. Now, this is the following day. So we have stops, stops, stops. And if you remember on this day, we're on the long side with an 85% probability of taking out, considering the trend is up, either, yes, this day's high or low. This day, this is our target still, 56.24. And what happens? The following day, we gap. And it's like, oh my goodness. And what do? Take the stops, take the stops, take the stops. And where's our support? 75 and roughly 50-ish, 49.25. And the low of the day was like 54 or something. I don't know. But where did we end up doing? We put in an outside day. Why does the market go down here, you're saying? Well, we don't know it will, but we do know it might. And why? The market is long. And if the market is long, what else is in here? Sell stops, sell stops, sell stops. We're all looking for it to go to the moon, except they all get thrown under the bus. Outside edge, then potentially fell shorts in the morning yesterday, as you guys follow the stream, review yesterday's stream, and then where do we end up? Isn't this interesting? Now, where was this on the chart from? It's been on the chart forever. As long as this has been here, it's been our target. And there's no way to know. It's part of the thrill. Who knows? Not my job to know. Since I can't, I have to use structured trades in order to get an alignment. Now, outside day, what is that set up? Now, if you're in Trader Lab, you have a trade plan, right? Let's look now at our trade plan. And this is something you have to kind of put together, but you can do this in Trader Lab. Now, it gets more interesting, doesn't it? I'm going to show you some levels that are very important. That thick line that I just showed you, which was our target for yesterday, is here. It's called the microcomposite VPOC. It's around 24, 25. This is the auction. If you understand how the market works, I think you're going to have the potential, and I'm always going to say that. So that was the target. And where is that now? There. Now, there's yesterday's high. What are the possibilities? Let's look. We're opening out of range in a gap, and the market is out of balance. What is balance? What does it say? It says that this price down here might, right, be too low. So what's the possibilities in a gap? Two things. One is gap and run, or gap and those who are long from yesterday go, this is great. I'm going to take some off the table. And they are responding to the gap. So what do we know about gaps? Well, we know that we can get selling. And then if the key levels hold, we want to get long. So if you're in TraderLab, you've got choices subject to your vetted plan that has a statistical edge. If we open higher and we see our selling, we have choices. The choices are sell it, to respond, and now you're aligned with the profit takers, and you know we have the possibility to fill the gap. All right? Key levels. Yesterday's high. You guys are familiar with this. Well, now let me ask this question. If the trend is up and we're getting the weak side selling, do you sell the gap up? The market's out of balance and we want to be long? Or do you skip the short side and wait for the long side? What's your plan? How about this? The answers are already existing when you come to the market. It's not what you do here. It's what your job is to follow a plan that has an edge. And if you don't have an edge, you're playing a video game, because you need to only get involved where you have a statistical probability that favors you. Does that make sense? Are you guys tracking? Please give a like, by the way, if you like this. Support the stream. It's the only way it's going to keep going. And if you're not in the TraderLab, use the link down below if you're interested in learning this. This is auction market theory, how the market works. I use no indicators. My indicator is participant behavior and order flow and structure. And it's not complicated. What it is random. So if you want to know why you have a hard time with this, is you're trying to create certainty in an environment where it doesn't exist. This is a short. Now, I don't take this just because it's a short. I see it, but I cannot react at 8:30 on the RTH open. By the time I'm conscious of the behavior, I'm going to show it to you though. Now this is order flow. So right here, you see this resting liquidity. 21, so we got iceberg selling there, here. These guys get out of Dodge, they pull. So right here, this is important. And again, what is this? The overnight volume point of control. That is the highest retail price from the ETH. So think of it as a retail price. In the intermediate time frame, that's a retail price. It's based on volume. High volume in an intermediate time frame is an attractor. This is where our target was coming up. And if we come down, we can test it. Yesterday's high filled the gap. ETH, high volume. It's the same as that, except in call it a shorter time frame. But it's the last auction, ETH. So what do I know? If this is too high, I can come down and check what's too low. If this is too low, I can go back to what was too high. And since the trend is up, I can, go out. But this is going to be resistance. So let's take a look. RTH open. Now, I'm going to show you structured trades. Now, not mechanical. If you try to trade mechanically with any process, you're going to get the same results you might be getting now, which is random winners, but overall, maybe not moving the ball forward, and you're continually working on making it better, but you're still getting the same result. Why? So let's look at this. We get our responsive sellers. Now I'm going to take you into something very nuanced. Let me show it to you. This is Trader Lab. You can learn this, but absolutely not mechanical. If you think you bring your habits from spaghetti crossing over to trading, in my opinion, you'll have the same outcome. So if you're having a positive outcome, then don't change anything. You know, the old saying, if it's not broke, don't fix it. What I found for me is I was trying to solve for something that had nothing to do with the business. It had to do with my need to be right and my fear of loss. So I went on the quest not to lose, of course, and that meant I was looking for certainty and confirmation. I know it seems so logical, but maybe that's not the issue. We all take stops. The casinos pay the gamblers. They haven't closed the doors. Well, I guess if I'm in gaming, using statistical edge and only playing games that have an edge or taking trades that have an edge, I'm in the same business as they are. But they do really well. They give you the ticket to the buffet, the cocktails, maybe comp your room, pay all the expenses, the electric bill, the heat, the air conditioning, the rest of it, and build those things. And they make a really good net return. Maybe instead of trying to do something that fits my fear, which is looking for certainty, maybe I should emulate a business that's proven and use a process. So I'm not inventing the wheel. I'm going to drive on a track that's already been created by a successful business model. That's gaming. So what's gaming? They only play games that have anchored inputs. They don't make them up. They don't get emotional. They just do their job. This is a structured trade. This is too high. This is the mid and the VWAP. I'm not paying that. Language of the market. Selling icebergs. These guys are absorbed. No clue. Where am I trying to go? First target's the ETH mid. Let me see what that is. Higher outside of range. I'm taking you now to the statistics. And you have to vet everything for yourself. Getting to the overnight volume point of control, 79% probability. By the way, no precision. Who knows? Getting to the ETH high, 76% probability. This is all before the market opens. Here, taking out the first hour's high, 68% probability. It's going to be there. Didn't know. Taking out the previous high or low, 63% probability. Getting to the previous high, 63%. What that tells me is I have a 63% probability of coming here. Oh, the overnight mid, you're asking me. The overnight mid, a 62% probability. Let's see if there's anything else that's material here. That's enough. Okay? So, and the probabilities of getting down here is very low. So all and under yesterday's, what's this here? I might have left this on my chart accidentally. I don't remember what this is. Is this yesterday's low, guys? 50? No, it can't be. Sorry, I don't know where this came from. It looks like an errant leftover. So anyway, short first if you are a counter trend trader, or you see the short, you don't get long, and you look at your statistics and you know we could get our responsive sellers down here. I'm spending this time. Why? Because if you're just making it up, you're not going to most likely have sustainability. If you want to build the business and create a career for yourself, I'm going to suggest you don't do what other retail traders do, which is make it up, can't manage their emotions. They don't know where their trades are. They're just trading ripples. And if you're chasing the market around, you're on your way out the door. Just the way it is. So too high, I'm going to label this, and I'm going to try to move along, but it's important you understand, shall we say, the backstory of all this. What I'm doing really is just following the participants. No indicator. What do I need an indicator? What's that going to do for me? I don't know. Didn't work for me. And I had tons of winning trades, you see. So I always thought I just had to make it better. This is a buy, a sweep. This sets up a counter rotation. Let me show you micro. Now, these are not longs. It could be, by the way. And that's up to your plan. Here, I get stops. I have a buying iceberg. I get a sweep here. Now, right here is resistance. Break low. Why does this not go down? Because on this side, we have absorption taking place. Buyers are here. And if I come across this, it suggests, now remember I talked about how the market goes up to go down and goes down to go up. What's in this leg? Shorts. What else is here? Buy stops over the swings, buy stops. Break low. Now this is resistance. Break high. What does that say? Potentially up here. VWAP, mid. Now, do you want to sell this or are you waiting to get long? It's a great question. Now, this, I looked at this and there's no entry here. It's a location because we have the gap, you see? And again, it's counter trend. But this is a trigger without entry. The entry in this configuration would be here. So it has to retrace. You would enter here, stop goes above there, not a recommendation. And then where's your support? It's right here. Here. Now, if this was qualified, and it is except the trigger didn't set properly, you have to get scaled here. And you're going to say, Tom, why would I, if it's going to fill the gap, why would I get scaled? Because the buyers were here. You see? The buyers were there. The buyers are here. We came above the sellers. So if I get short, and this is not a short, it's just, it's a short that's not qualified only because of the entry, not for any other reason. Where do I know my buyers were? They were right here. So if I take a short, I just want to show you structure. You got to scale there. Liquidity in the book. Now, this is called VPOC migration. This was your scale. This sets up another trade in the Trader Lab, VPOC migration. I did a specific webinar. And here's another piece. So you got this is resistance. This is support. This is resistance, no entry. This is support. This is called VPOC migration, a structured trade in the Trader Lab. And now I'm going to have to get below this. Why? Buyers are here. Buyers are here. This is a short. This is your obstacle. And then you're going, wherever you go. VPOC migration. Still going south of the border. What about this? Liquidity. What do I do with this? Teeth to chatter and a scale. Watch. Now, isn't this interesting? Let's look. Now I'm going to take you back. RTH open. Where's my resistance? It's there. Variable high volume node. What does it say? Well, first of all, this is a sell. Okay? I already went over that. This is language. So this is a foreign language. And I know we all use our indicators. Convenient, it's easy, it's Google Translate. All I got to do is sit back and let the little line cross, right? Well, this is too high and that's too high. So I have resistance here and I got my buyers here. This is my retail price coming down. Let's watch it now. I got to label these things. I'm falling behind. Now, what I'm showing you is process, not prediction. I have no clue. Now, the beauty of being clueless is not ignorant. Clueless means I'm completely flexible and I'm staying in the moment and I'm attempting to use my skills and the tools like order flow, to help me anticipate where behavior might take place. And again, not where it will, because there is none of that. It's where it might. I see the markets coming off. Was there any news, or is it just floating around here? Oh, hold on here. It looks like we found our sellers. One moment, guys. I got to move some stuff around here. I'm kind of missing what's going on. Was there news, or is it just we're all lucky today? I can't listen to my squawk and all that stuff while I'm streaming, or else it'd be maddening. No news? Okay, great. Thanks, guys. Okay, by the way, if you're in YouTube, please give a like. It's kind of nice. So, watch. Too high? I'm out of here. Here. Can't get short. No trigger. Actually, trigger, but no test. So no trade. Buyers are here. VPOC migration. I'm not paying that. Lower. VPOC migration. You're out of your mind. Lower. VPOC migration. Going to zero. What happens? I break across. As soon as I come across, then it's a squeezeteria. Why? Stops, stops, stops. You have to think like this. Where's the fuel? I built a trading system early on in my career, and goes back to the Stone Age. It had to be in the mid 80s, and I named it Paper Chase. There was a TV show many years ago, and I forget exactly what it was, but it was maybe a legal, an attorney thing or something. So, and all my friends were floor traders, so the paper, it was all about where's the paper? Well, the stops it's where the paper is. So I built system built on stops, trading into what I called fuel. So I was always conscious of trading into the stops. And then if the stops get taken out, so I've been doing this, some of these elements that you see since the early 1980s. And then over the years, you add, you throw away, and then concepts, though. So for me, the development of concepts, there was no information when I started. So I was in a vacuum. So I know this is too high. And I know this is the ETH volume point of control. And I know I got stops over the opening swing high. So I don't know anything more. This could be the low of the day. No clue. Don't we all wish we know? But let's look at what we know here. Too high, too high, too high. I come back. Now, why not this one? How about this? This is a trigger right here. Selling icebergs. Buyers are here. Sellers are here. No clue. Buyers are here. Buyers are above the sellers there. Break high. The sellers were here. It's now support. Break high. The buyers are here. Sellers are here. Buyers are there. Break high. Going to the moon, Alice. Buyers are here. Buyers are here. Sellers are there. Sellers are there. Sellers are there. For this thing to go up, I got to hold this or this because my sellers were absorbed. The buyers are here. I'm into micro now. Now I got selling icebergs. And here's something, the only thing I use from indicator world, stop divergence. If the market's going up, 31 buy stops, and these are aggregated. If I open this up, it'll break them apart. But generally, I just want to see the broad stroke here. 28, so higher price, less of something. One stop, selling icebergs, and I need initiative buyers for this to go higher. Well, and where's it going to exhaust? This is the great question, and I have no answer, except I have this. So I'm looking in here. So if this is a trigger, now the sellers are here, here, the buyers were there, there, and there. And in the micro structure, right here, this micro is too high. Now, as a mere mortal, I cannot react to this. But when I come here and I can't get back above here or there, it sets up a trigger. So I can take a short here and I can put my stop above here or above here. And that's subject to your plan. This is your resistance. This is your liquidity. So I know if I put a trade on here, it could just as well go there or out the top and I take a stop. But I got some liquidity and I'm leaning against the rejection of price. I'm leaning against the ETH volume point of control. So I'm just telling you, that's now, again, this is responsive selling. And this might be a very high risk trade because maybe this is the low of the day. So if you took the shorts, you might not take a long. You might just say, I'm out of here. And then you wait. Too high. Watch. And what do we know about this? This is too high. There's another trigger. That's a short. This I can't do anything with. This is a target if you took shorts. Now let's look a little further. Now we come across. Okay? So now let's talk about longs. There. So subject to how you handle this, you could do the following. You could be taking shorts to there, or if you want to get aligned with the long side, how do you do that? So are you selling responsively or are you buying initiatively? Look, liquidity, the buyers take control here. Do you notice the difference? The sellers were here, responders, and look at the change in behavior. Now, if I come up here, I can sell it. But I think this is the smart play. And the thing about it is, let's say we didn't get long here because it just runs away. Who knows? Now, if you're skilled, you could get long here. And then you got to be looking at this. That's one way to look at it. The other way to look at it is you're sitting here with your jaw on the keyboard and you know, let's look at the process. If this is too high, then what's too low? What happened here? I broke, I tested it. I'm not paying that. Vroom. I'm not paying that. Vroom. Too low. But yeah, but this is too high. Yeah, but that was too low. So what do you get? Liquidity. Too low. Test. Long. Trader Lab longs. And you put your helmet on, your stop is under here or under here, a little tighter. So you could be buying that, and now where are you going? Back here. Notice the reaction when I come back. If this is too high and this is too low, and I come across, where am I going? There. What else do I know? Stops are here, stops are there. And the trend is up. So now you get the lay of the land. This is, if you're only taking longs, they're here. If you're taking shorts and you're responding, they're here. Resistance, support, resistance. And what happens when resistance becomes support? You have a long here. So you're either long here, and then you have statistical probabilities above that I already went over. ETH high, right? So that's your longs, and there's more. And we're going for this. 5690 is the extended target. Let's look some more. Now, this is the report at 9 a.m. I don't trade reports because what am I going to do with this? All I'm going to do with trading a report is throw dollars out the window and get skidded on my stops. And there's so many structured trades that show up in Trader Lab. Why would you fiddle with this? Unless you're a gambler. And then I say, go to a casino and make sure to get the cocktails and the ticket to the buffet. So this is now my retail price. This is resistance. Let's watch. So report what's going on. VPOC migration, resistance. See, where's my support? Here. Now I come below it. I got nothing to do. Let's watch. Don't forget, outside is here. Don't know, clueless. I have a sell sweep. That sets up the rotation. But I can't do anything with this. Now, what else do I know? Liquidity was here. They pull before the report. So that's one piece. The question becomes, are they going to come back in? So I get this. Down I go. All right. And as far as I know, we're going to fill the gap and come here because that's my support. Remember, it's all random. It's wonderful, isn't it? So what do we do here? Watch. If I break high, as soon as, like here, I break high. If I break high, this is support. If I break high and I test it and it's too low, then resistance is this right here. So if you got long, and this is a structured trade, you'd be scaling like here. And then helmet, because who knows? Okay, so that's what gets you on the longs. Now let's look a little further. Remember, where's our resistance? It's up here. Where did this come from? Let me show you. So when I come up, these are buy sweeps. And when I get sweeps, I'm on alert for a counter rotation, just saying. So if you were long earlier and ahead of the report, you would be out of this thing. Now, the high volume in this structure, I'm going down as you think a time frame or fractals, is here. And let me explain what I'm doing. In this structure is the volume. The sweeps are here. I have my stop divergence, only 2 going off. Selling icebergs. Where's my buyers? 78 and then 2. Where's my buyers? Now, I don't know. My buyers are, these guys were absorbed, so my buyers are there. My sellers are here. That's all I know. It's a consolidation. I break low. I have a trigger. My entry is there if I want to fade, and my stop is there. This is the high volume. If I don't get short here, I can certainly get short there and a stop over here. But then where am I trying to go? Here, and then here, and this trade would be over. I'm just showing you a short. And now the thing about this is, that might not be your trade. You know, I might go, I'm not taking any shorts. I'm just using this for trade management, you see? So your trade plan, and notice where we come, you see? So what do you have here? That's a short. Liquidity comes in the book. We had our sellers here. If you have sellers here, maybe they'll go, oh, really? Have some more. Liquidity comes in. Icebergs, stops, potential short. You're leaning against this level, and your stop would be out here. And then where's your support? There. Let's talk about what this is. This is an auction in this time frame or fractal. The participants went, what do you think? Now, I'm not paying that. Yeah, but it's on sale. Yeah. And then one side takes over and down we go. And now this is our area of support, right? After the report. If I come back across, where was the sellers? Here. So this is a VPOC or a high volume node. Think of it like shopping. Retail is high volume. If that retail price is too high at the moment, remember, this is all happening in multiple time frames or fractals, then you're going back to the store and you're going, Why did these guys leave the store? Well, the price at the moment is too high. If the shoppers come back to the store, why might they leave the store? Are you kidding? They didn't lower the price. Well, where's the price on sale? If this price is too low, this price is too high. I've got now this bandwidth to operate with. The reason this is too high is because the sellers won't pay it. You go to the store and the price is too high, you might say, forget it. But somebody buys it here. If you need that tuna for the casserole and it's overpriced, you're just going to throw it in the cart and move on. But if they put the tuna on sale and they put it down at a price that's too low, that the market said, we're not selling it to you, and we checked that price. Is it really too low? Yes, it is. Sellers are here. Liquidity comes in. They are absorbed. This is along. Where to? The retail price and the retail price that was too high. So you get trade across the range. So there to there to there. And then, since the trend is up, you see how it hesitates here? So when you're trading from here to here to here, or here to here, that's the reaction. This, now you get VPOC migration. What does this say? That now I'm back again in multiple time frames. I hope you're getting something out of this. And if you're terribly confused, I apologize. I trade levels, and I trade it based on what the participants tell me, not what an indicator tells me. What's my indicator going to tell me? Is it going to tell me to get short here? I don't know. Well, I'm not getting short there. I know, though, that this is too high. So if I come here and it's too high, I can come there. If I come back here and it's too high, I can come wherever. So I'm using these levels as obstacles. Now, if I get this shifting up, this is a higher time frame. This represents the volume for the whole day. These are fractals. In other words, think Russian dolls, Matryoshka dolls. They're inside each other. So when this shifts up, higher time frame, this is weaker. This is not major volume. It's weak. This is the strongest one. And this down here is even stronger. Okay, so fractals, intermediate time frame, developing daily time frame, little fractals along the way. So once I break out, and now I get my buy sweep suggests counter rotation. The sell sweep suggests up. Now, location, 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 think real estate. Location, location, and I'm going to stop for a moment here, and I want to show you structure. When I'm educating, I guess is a good way to put it, or teaching, traders, this is the output, if you will, of order flow. When you box in what created the outside and inside edges, you can then create structure to help you see it. So this says counter rotation, maybe. And by the way, maybe. This is support there and there. Okay? It's a long. And it's overnight, wherever it is. Then you're going, did we get this here? Yeah, we did. That's why you got a reaction here, because it was the ETH high. Then you're just going north. And then the idea was to try to get out to one of these targets. Now, 1.5 IB is also a statistical probability. I got to give it to you. And then it's going to be the shorts, but I'm going to come up for oxygen. And nobody knows, by the way, so don't get carried away with this. Taking either 1.5 IB high, which is the first hour's high, or IB low, has a 68% probability of taking one of these. So there. Also, taking out the first hour's high has over a 90% probability, either high or low, I should say. When you take out the first half hour's high, which is from here, that gives you about a 70, well, let me see what it is here. I've got so many statistics, I can't find them here. 30, about an 86, I think it's 86% probability that we're going to also take this out. and overall a 90% probability of getting through here. So it's longs only. Now we have another structured trade in the Trader Lab. Boy, this thing is going south of the border. I want to get into real time. We have what's called the IB continuation trade, and this sets up right here. It's a long. So this is another Trader Lab long. And I think I'll finish with that and try to get into real time. And let's look at the reversal. VPOC migration, right? What do we anticipate? Up. What happens? Let's look at this reversal here. I haven't seen any of this, so I don't know what's going on. So right here, I get a sweep, buy sweep, sell sweep, buy sweep, buy sweep, liquidity. You see the liquidity stacking in the book. I'm seeing the selling icebergs, and I'm still clueless. This is my support. So again, subject to your plan, you'd be managing your trade because we're all clueless. This is the last long, and then the next one is this one. So these are the longs, okay? Long, long, not to mention the stuff down below. So all these are longs. Now, as far as we know, this is the target, okay? And that's why you got to have a trade management plan. So I get my sweep, and as far as I'm concerned, we're going, here. I get VPOC migration. I'm very enthusiastic now we're going here. Except right here, I break below it. This is a problem right here. So this now becomes potentially too high, and it's resistance now. So let's watch. I'm going to label it, and now I'm going to come up. I'm going to get to real time now. I want to get out of this. Supports here. Below it, too high. And now with this kind of move, this is not just a counter rotation. It failed. So here, nothing to do. Finito. That's that. Now let me look at your questions. And I'm going to, and we're coming underneath everything. So now fill the gap and maybe come inside. And I say maybe because I don't know. Are you guys tracking? Please give a like if you're in YouTube. Thanks for your patience. Are you guys tracking? If you have questions, post them. I'll do my best. And I want to throw some levels up on here. I have Investor RT as my higher time frame charting software, and I use it to export levels. Okay, guys, how we doing? We okay? Please give a like if you're visiting in YouTube. By the way, this is a process. All this is trading. Nothing more than that. What is trading? It's a statistical process in a random environment that drives us nuts. And it does that because we are wired to avoid risk, and we are attached. Everything that we are emotionally triggered by, which is fight and flight, FOMO, all this stuff, fear, we're trying to solve for it. But if you're in an environment where it doesn't exist, maybe we need to solve for something else. If we can't get that, if we can't have certainty, then what do we have? We have maybe. Can you solve for maybe? The casinos have solved. So that's our business model. What do? They are detached from the outcome. Now, I know when I take a stop, I am detached, but I feel it. That's the difference. I feel emotions because I'm wired for it, but I don't respond to the emotions that are counterproductive to my business. So I had to learn about emotions, and that takes practice to interrupt these instinctual responses. Think of it, a lifetime of avoiding risk. In other words, let's not walk in front of the bus. Okay, so we don't do that. Or when you do walk in front of the bus and unconsciously or intuitively is the right word, you jump out from in front of the bus without thinking about it. What is that? That's another layer of behavior that was developed over many years. The saber-toothed tiger, I'm going the other way. Let's make sure there isn't a predator behind the tree. In fact, if you're in New York and you're walking around in New York City at night, you kind of think the same thing, right? So it's all the same. So we're doing the same thing here. Except in this environment, those things don't work. They're actually the things that take you out of the business. So you really need to learn about yourself and these responses. And I always suggest to traders in Trader Lab, you need to use every tool you can get your hand on to learn about yourself and to change the behaviors that are counterproductive to your business. So business plan and a lot of repetition and a lot of replays and only taking trades that have a statistical edge. The casinos don't get bored like we do. They don't make up trades because they're sitting in front of a table, right? Well, we're sitting at the table. We only play games that have an anchored input so we can measure them so we know we have an edge. What about all the trades you take that are winners, but you're still a loser taking those trades? Why does that happen? They don't have an edge. That means over time, you're going to lose. If you took the time to know which trades give you an edge that favors you versus all the winning trades you take where you still pay the gamblers, would you still take those trades? Instead of trying to make it work, understanding what doesn't work. That's the question. The answer's in the Trader Lab. And it may not be right for you. I know we like our indicators. Trust me on this. I shared an office with George Lane. He created stochastics. I thought it was the Holy Grail. And when I started in the business, indicators were new. So I had a great time spending years reverse engineering indicators and trying to find time frames and then creating my own and then building trading systems, which are indicators on steroids, doing optimizations and walk forward testing. And I always woke up at the same place. So it wasn't my effort. And I couldn't figure it out. There were no off-floor traders when I started. If there were, I never met one. All my buddies were floor traders. So I was really, and there were no internet, no personal computers, nothing, So I was really at a disadvantage because I only could go on what I thought made sense, my logic, and my logic is defined by my instincts, my primal wiring, not the business. So I didn't know this was gaming. I thought it was something else. That cost me 10, 15 years. I'll say 10 just to keep it simple. And it just was the outcome, and I didn't know. So it took me a long time. Nobody should spend as much time as I did because the problem I had was I would have winning trades and losing trades. If you threw a dart at the board, you'd have winning trades. If you had a random generator, it didn't even say buy and sell, and you just pushed the button, you'd still have winning trades. That has to tell you something about randomness. If the environment's 100% random, you need to have anchored inputs. And that's just an opinion, but it's based on going on 46 years of doing this. And unfortunately, I wish I could capture the years that I lost because I couldn't. And I also couldn't understand why things weren't working. But let's look at what's happening here. Obviously, we found what was too high, and there's no way to know, okay? So too high. So for me, I might not be a short because I don't have a way into a short here. But I would be out of my longs, that's for sure. And when we break under here, this is telling you it's too high, but where's the way in? This is support. Now we break away. There's no entry. Let's come back here. Down here is support. So here's what's happened. These are microstructures. If this is too high, I leave it. If this is too high, I leave it. And then we go up a bit in time frame as you think of it. I'm not paying that. We're out of here. If I break under here, now I'm getting really advanced. I probably shouldn't go here with you guys. But this volume is the retail price. I'm rejecting. Now remember what we were doing earlier. The volume is here. This sets up a trigger. I have nothing to do. I'm going because I'm thinking that we're going higher. When I fail to get back here, there's trouble. But I still don't know there's trouble because I'm still looking at this. because this is where the volume is. When I come under here, there's big trouble. Now, resistance is here. Resistance now is here. And I don't have a trade. I got nothing here. Now, I know what you guys are thinking, because I used to think it. How can I get this? I could have got long here. You know who talks like that? The lunatic under the hood. The one that's watching and whispering and speaking to you. You know how that language or the voice in your head, the one who's judgmental and is really smart in hindsight. You should have sold this. You could have got long here. You ever hear that in your head? Have you? Have you guys heard that in your head? Do you know what that is? Profit climb, I think I answered your question about the IB continuation. So the voice in your head, the lunatic, as I call it, under the hood, is going to say, now this, by the way, can be a short right here. It's not a recommendation. We came back to the retail price. Now there's two possibilities. Come down and check this or come across the range back here. That's all you got. This is not a recommendation. I'm just observing. Let's look what happened here. Let's just put a few pieces together. In here is the high volume node. A little hard for me to walk and chew gum at the same time. What do I know about this? I know this is too high. There's my volume. What do I know about this? My sellers were here. What happens if I come back? These sellers might sell again. So I get a sweep. That's a trigger. And this is not a recommendation. Everybody takes stops. And if I come through here, I can come across the range. Let's see what it does. And if it does come across the range, I have the possibility of a short here, back to here. Those are structured trades. So let's see what it does. How we doing, guys? We doing okay? This is called structured trading, and it's a compilation of using order flow, market mechanics, using the volume profile as a chassis, and understanding how the market works, and also accepting who knows. It's random. So my job is to know where my trades might show up. And then if I put the trade on, my stop would be up here, and I'm looking to get risk neutral. Then I had my buyers here. If I happen to come down, you see the buyers were there, the buyers are here. So what do I know? I need to get risk neutral, and then I'm looking potentially to come under here or not, you know. And chances are it won't, but if I'm trading a plan, then this would be a potential trade. The problem with the trade, so you know, we're doing something called mean reversion. So if we come outside, we can come back. We come outside, we can come back. That's why there's two trades here. This down, and if we get squeezed out and they will get squeezed, then VWAP and out here somewhere. And this would align with an outside edge of a distribution. I'm not paying that. That tuna is too expensive. Yeah, but this is the retail price. Oh, it's on sale. Let me throw 5 in the cart. Back to retail. Too high, too low, fair price. Two possibilities. It's now too expensive, and I'm going to test, or I'm going to squeeze, come out here, and come back. That's my plan. That's my trades. I'm not saying it's any good, and it's definitely not a recommendation. I take stops every day, all the time, and that's fine. And the reason, of course, I take stops is I can't predict anything. I don't know anything. The casinos deal the hand, the cards. They don't know anything. They only do is they play it the same way. And the outcome is random. If I can detach myself from being right and needing to know, what I do know is what might happen. I don't know anything else. You see? So what I know is if this is too long and there's my too low, I can come here. If this is too high, I can return there. If I come across and take the stops out, I can come here and then I put the trade back on again. That's what I know. That's all I know. BE, there's no confirmation. What confirmation long? Where was the confirmation? What's the question referring to about a long? Can you be more specific there in YouTube? Thanks. How we doing? Please give a like. Even if you don't like it, give a like. How about liking that? At least I'm trying. It supports the stream, and it also supports Trader Lab. It's no cost, and I'm not saying this will work for you. You have to actually roll your sleeves up and maybe change your thinking, which is not easy to do, by the way. It really isn't. Why does the market do this stuff? And can we only take the trades that win? No. Casinos can, if the casinos could differentiate between, the hands that win and the ones that lose, they would skip the ones where they lose, but they can't. So they rely on anchored inputs, which means they play the games the same way, no matter the outcome. And they just depend on the statistics, which give them an edge. So the dollars, even though they pay the gamblers, the dollars flow across the table to the house. That's our business. So if you don't want to be in the casino business, then trading isn't for you. The gaming business, Kind of weird, but that's what it is. I'm going to try to show you something, and I'm hoping I don't have a problem here. If I lose it in Discord, I will try to come back. Am I still going in Discord? Am I still okay? Yeah, it looks like it is. I want to show you the Trader Lab. You're all welcome to visit Trader Lab. You can use the link in the bottom of YouTube. There's no cost for this. It's a community of like-minded traders that have come together to leverage their collective experience. It takes a community to do the work, data mining. Now, this is an advanced process, and this is a serious community. Our senior trader has over 50 years experience, and I'm still a puppy, 46 years, and it doesn't matter how long you've been trading. The idea is whether you're a new trader or no matter where you are in your development, you can gain something from the benefit of other traders' processes, their struggles, because what you're doing is not different than what we've all done. So this trade looks like it's going to go south of the border, and that's okay. It is what it is. It is counter trend, right? So this is Trader Lab. Now there's something else here I want to show you, and then we'll get right back to this. So you guys know, I already said this is what we're doing. This is resistance. It's either going to come down and test those buyers, or we're going to rotate and squeeze out the shorts. And that puts us up here. That's it. I don't need to know anything else because I can't. And even then, I don't know what'll happen if I come out here. I'm going to show you the library of webinars. Ned, thank you for curating this. This is the primer webinar. It's got about 36,000 views, something like, or 33 maybe. And this is a high-level overview. Then we have Meet the Trader Lab, Advanced Trader Education, Research, Data Mining. This is what's going on in here. The reason these statistics exist is because of a lot of work. The understanding of context and market mechanics, a lot of work. When I say that, I mean it. And now here's a good example of the entire process. And I show you this every day in the stream. Top down, bottom up. Fractals, Matryoshka dolls, they're inside each other. Watch this one. I planned, I saw, I traded. And there's also this one. Are you trapped in Trader Groundhog Day? That's what I was trapped in. Winning trades, trying to make it better, and just getting more of the same. Winning trades, still not going forward. Despite of having multiple winners in a row, winning weeks, I was still not able to sustain it. So I always thought I have to, make it better, tune and tweak. Are you tuning and tweaking? I thought I could do it better because I built systems so they would do it. And I just got more of the same. Why most traders using indicators fail? You might want to look at that one. And we all take stops, so let's get over that, all right? No escaping that. So Use the link in the bottom of YouTube if you want to visit Trader Lab. It's a great community. It's traders helping traders. That's the Trader Lab, and there's no cost for that. So let's go back to this thing, and let's see what's going on. So we're sitting here, and we have now this looks like it's going to, right? What's going on here? I've got my buyers here, and I have my sellers up here. I got sellers here, buy stops are here, support is here. I need to get below this to get here. If I can't get below this, where's my next opportunity? It's out here. Now the trend is up, but I fell all the way back inside. I'm under the mid, I'm under the VWAP. So chances are, in a full session VWAP, and my outside edge is here. This is what's called the distribution. So outside in. So if the market is now two-sided, then I have a two-sided plan, and it's outside in. So I'm looking for, if I come out here and it takes my stop, then I'm out. I take my lumps as they were, and then I'm just going out here for the next trade to come back to here. That's mean reversion. So that's it. I got nothing else to tell you about it because that's my plan, and that's not necessarily means any trade is going to be a winner. I take stops, you take stops. Now let's look at the delta. Sellers are here, buyers, buyers, buyers. Some selling is here, but the buyers are now back in control. What I want to see now is this is delta. I want to observe as I come outside, and that could be anywhere out here. This is the VWAP. There, the mid. This is the full session VWAP. So I'm interested in these areas. In the meantime, while we're waiting on this, you guys have questions? So now I'm still stalking a short. It's not a recommendation. And I don't know where it's going to show up. I know outside edge somewhere. So this, nothing to do now. I'm above this, and the only way I can take mean reversion is to come outside to come back. So I need the range. So those of us that are triggered emotionally are going to be selling this. But this is the fair price. I can't sell it. I need squeeze to get out these shorts, squeeze them, and their stops are at VWAP and mid. And if I can come outside somewhere, I'm going to do mean reversion. This is part of a trade plan. You guys have questions? Well, Corey, if you like the Discord, how about giving me a like here in YouTube? Helps the stream. CVD? I don't have any settings for CVD, and I really don't use it. I don't use CVD. They're just on here because I don't notice it. I'm here. So instead of the delta for the whole thing, I'm looking here. I'm looking at the order flow and that there's sellers here, and look at the liquidity here. Now, this is suggesting downside rotation. If I'm not outside, I can't take a short. My discipline requires parameters. Now, this thing can fall out the bottom and go to zero. If I don't have a structured trade, I don't have a trade. I just hang out. I'm going, work on my crochet. I have nothing to do. Part of the business of trading is just trading when you have an edge, right? I don't have an edge here. And now here's an interesting thing for you to consider. The auction, this outside in, is mean reversion. This is the trade I'm looking for, but it needs to be, I have to have the range to come back here. This is a trigger. I'm going to show it to you, but it's, again, for me, it's not a trade I can take. I'm going to show this. We're going to break this out a little bit for you so you can kind of see it. So what do I know? I know this. Let me get this out of here for you. me try this again. I know that's the retail price. That's why I was looking for short, okay? And I know that for me to have a qualified trade, it needs to come outside. So I have enough range to come here. This sets up a trigger. I'm going to show it to you. And it's not a trade I would necessarily take. Or let me put it to you this way. It's a trade that somebody might take if they already have all their pieces in place. When you're developing, it's much more important to develop discipline than it is to play the game, because you'll take yourself out of the business before you learn the game. So I kind of think it's better for traders to learn. So there's your trigger. The micro high volume is sitting right where that VHVN is. Right there. So this is what this is. This is the same. This is called a fractal. So I got my sellers here. Remember, stop divergence. Less buyers here above these guys. Selling icebergs were here. Sellers, break low. Where did I break? Where's my buyers? They're right there. Why did the market go up? I had buyers, right? Well, if buyers are here, 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 going to the moon. Seller, buyers are here, break low. What happened to these guys? Trouble. Who took control? Sellers. Where were the buyers last in control? Here. How do I sell this? Here. Here. Where's my target? VPOC. Can I take this trade? No. Well, maybe. See, here's the thing. I could take this trade. You don't want to take this trade. My stop has to go here. This is my entry. This is called structured trade. And this is my scale. Well, and it's not right here. It's 1 tick under, 3 ticks stop above, the range. Now, I need to get risk neutral. What determines whether I can take this trade is the distance here. Remember, I was talking about mean reversion, outside in. This is mean reversion. And we always say, yeah, it's mean. Where's the outside? You see? So for me, and for Trader Lab, the outside is out here. Out here. Because now look at the range you would have, because this is the trade. So I was just trying to come out here for you guys, but I can trade this. But you shouldn't trade it. And the only way you could trade it is if you understand triggering structures. You would put a limit order here. Most of us are fearful. Just think about what you would do. Would you say, I want to make sure it's going to go down before I hit and I get in here or here with the market order? But if I had my limit, I'd be in 1 tick ahead of this. So I'd be short there, I'd be short there, and my stop would be 3 ticks here. What do I gain in a random environment by looking for certainty and getting in here with a stop that has to be there? And my obstacle or scale is here. Does this make sense? Are you guys following? This is the question. You need to have the answer. You don't, you know where to find it. And I'm not saying that this process will work for you, because let me just say this. Many retail traders just want to play the game and push the button. They're hobbyists. They're gamblers. They're not going to be in the business. By the way, let's go to fractal world. If this is too high, and this is the retail price, and this is now the retail price, is this too high? Where's too low? Wasn't it here? What do I got coming back in the book? Liquidity. Where might this come? Might. Maybe. Write this down. What's the best you got in this business? Maybe. Maybe it'll do this. Maybe it'll do that. Maybe this right here will come back in to support. Maybe these buyers right here, those buyers right here, here. Maybe I'm going to come here. Maybe if I took this, if it qualified, maybe, and I'd be risk neutral, or you don't take it, doesn't matter. Now I have a sell sweep. That's just counter rotation right there. Where's my buyers? Well, I'm looking for it to come down here, and it doesn't mean it will. Wouldn't we like to know what it was going to do? I know I would. So would the casinos. Guys, is this making some sense? This is trading the auction using the volume profile as a chassis because prices are not created equally. You know, if one person goes to the store and buys tuna at $5 a can, it doesn't mean tuna's worth $5 a can. And there's no volume. It tells you that price is not fair. If I come down to where my buyers perceive the price was too low, maybe it's not fair. Maybe if I come up and I find where the price, and who knows where, out here, right? And I get a trigger, and if I have enough room and I vetted it, maybe this is too high, and this is the mean in here. Well, if I reject it, then where might I go? To the mean in the next higher time frame. If I break below the mean and it's now too high, where might I go? Here. This is structured trading. Now, if you're not willing to take stops and be abused, wrong business. You know, casinos are willing to pay the gamblers because the only way they extract the dollars from the gamblers is to get the gamblers to come to the table. And why shouldn't the gamblers win? Of course they're going to win, but they don't have an edge. So the casinos just deal the next hand. They're not emotionally attached. Can you guys see? If you didn't take this, you got this to here. And I'm not saying it's going to get there. I'm saying that's my plan. And why? No indicators. What do I have? Order flow and what I understand, which is the buyers were pretty motivated. So if we had buyers absorb the sellers here and they grab the ball, is it possible these buyers are going to be here? That's my question for this astute group of traders. I'm not AYAPS. Were you planning the short because it came down from top to the open? I'm not quite sure what you mean by that. No, I'm shorting because it failed my key levels. Now remember, what do we have under us? Now this is key for me. So if I'm trading, now I could be done with the short here. It doesn't matter. Now you got to watch what happens here. And we still didn't quite fill the gap. And remember, from the higher time frame, this is the higher time frame price. Now I'm going to throw a little curve at you just to make you crazy so you have something to think about over the weekend. This is yesterday. After we clean the stops out, and you guys should review this over the weekend, it's going to help you maybe think a little differently about what you're trying to do. This was our target. Now we opened in a gap. We had our responsive selling. We came down. We did not get here. And we did our thing. This is our target above. We didn't get there. All right. C'est la guerre. And there's more to this, but I'm going to keep it simple for time. Let me try this. Coming from out here to here is mean reversion in a higher time frame. If I'm higher, I can come back to here and revert to the mean. Now I go down in quote time frame. And I know you guys, I don't use time. Oh, look at that. Isn't that interesting? Where might I return? If I come back, I can come here and it's still mean reversion. So trading from this fractal to the VPOC is mean reversion. It's outside in. If I take a higher time frame approach, as you think of it, I could come here because this is the mean of an intermediate time frame. In the short time frame, and you don't have to worry about any of this, what do I know? Absorption buyers. What do I know about this? Target. Are you guys with me? This is Trader Lab. I'm not saying it's a good idea. I'm just saying it might work for you. And if this is too low, because it was too low and I had my buyers, where might I go? There. Or fall out the bottom. You got a preference? Why might it go back here? It's the same reason it might go back there. This is too high. This is too low. This is fair. If these buyers lose it, then this, not a recommendation. If these, and why did it go up right here? Because of these guys. So we'll see what it does here. Now, I think shorts are the way to go. Just me. But I could also just trade it from there to there or there to there, and the trade is over. Now, if you're going, how do I know? Here's the answer. You don't? So don't think about it. Here's what you do, at least in my opinion, and this is what I figured out, unfortunately, over too many years. I don't know what's going to happen. So all I can do is wait for the locations, take my plan, and try to stay in alignment in a random environment, you know? So what I know is this. This is all I know. Now, if I get below here, I might have another short right here to go to there. Let's see what it does. Not a recommendation. I got to look over here a little bit more to the left, make sure I'm not out of my mind. This is support. It's a variable high volume node. There it is. Okay. And let me show you a trigger. Advanced. Now, I try to keep this somewhat at a level, because my goal is that you guys learn how to trade. You can go much further with this. I have a lot of other things I do, but it's all relative to this. Where was my buyers? Here. Where's my liquidity? Here. What now? Maybe. Let's see what it does. Not a recommendation. What do I know? This, and if I stay below this, and I can test this, then I can go lower. Let's see what it does. And this is not a trade recommendation. Everything is maybe. Maybe this is too high. Maybe it's not. Maybe our buyers are back in here again, and we're going to revert back to the mean. Maybe that's what's going to happen here. You see, I'm above this. Buyers were here. Buyers were here. These buyers are back in here. They're over here. So we thought we had them here. There's your rotation. So if you took this, leaning on this or this, you get a scale, you'd get taken out. If you took this long, because these guys are still here, you see them? Then you'd get the rotation. We need to hold this absorption, which comes right there. Let's see what it does. I'm almost out of time, guys. Please give a like if you're visiting. Use the link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There's no cost for this, and this is advanced trader education. There's a lot of tools, a library of webinars, 60 PDFs of structured trades. And the idea, there's no plug and play. Don't we wish there was? No plug and play. That would have made it so easy. Doesn't exist. Where's our support, by the way? It's here. Okay. Let's see what it does. Where are we trying to go? Here. Mean reversion. Stressing the mean. Can you see why I was looking for shorts to there, and then longs, and right now to there, and wherever. Are you following me? Is this good? Please give a like. This is Trader Lab. Please give a like on the way out. Remember, you need to verify your email address. Click the link in the bottom of YouTube. I'd really appreciate you leave a like. It's like to be liked, and it supports the stream. Click the link down there but you need to verify, and you don't need a Bookmap subscription. If you do have a subscription, use your email associated with your key. The only way to gain access to Trader Lab and all the additional education in the Bookmap server, stocks, options, crypto, order flow, and market maker behavior, a lot more, is to register. And you won't be solicited. It's free. So even if you're not a Bookmap subscriber, but you do need to register so we can kind of match you up with your email that you register. It keeps the spam out. And you guys all know about that. So I don't tell you about spam and being stalked, Please give a like. If you have further questions, come to the Trader Lab community. Either I will and I narrate in there and post regularly. My goal is to help traders understand the business you're trying to be in. Now, this still looks like it has downside potential. It's not a recommendation. The mean reversion trade is trying to get back to VPOC at 45. Even if the trade fails, guess what? You'd be risk neutral. Now, if you see the sweep up around 643, if you're watching on Bookmap, you will notice that sets up a counter rotation. This. Where's resistance? Here, where were my sellers? Right there. There's a trigger. There's resistance. There's a sweep into resistance. I'm breaking it down like Matryoshka dolls. So if I get long somewhere, I'm going for this, but I know my sellers are here, which is why I want to return there. But I also have sellers right here. And when I get the sweep, I can anticipate the rotation down. Again, it's all trade plan specific. So there's no right answer to any of this because it's random. This will drive you nutty because we're looking for order, predictability, consistency, right? Doesn't exist in the market. It needs to exist in your plan. Because if we're in an environment, remember how the casinos operate. Their plan is the games they play. They only play blackjack exactly the same way. They don't know what's the cards coming out or how gamblers play the cards. Embrace that concept because that's the trading business. And if you can embrace the concept, then you understand what you need to do. And then if you come to Trader Lab, you might be able to learn what to do, how to do it. And then you're going to have to roll your sleeves up because you're going to need to change your beliefs about this business and understand your primal wiring, which suggests that you look for certainty and confirmation in a business where it doesn't exist. Click the link in the bottom of YouTube, guys. If you want to visit Trader Lab, take advantage of the library of webinars, the 60 PDFs of structured trades. You need to verify, and please give a like on the way out. And thanks so much for visiting Trader Lab today. I appreciate your time and your interest. Have a great weekend, all. See you Monday.